Hi everyone, in this tutorial we are going to take a look at how to write off inventory inside QuickBooks Online. Just a note about inventory and writing it off. Sometimes when companies do their inventory on hand counts, many companies do it on a monthly basis, they compare the quantities on hand that they actually physically have against the amount of inventory that's showing on their accounting system, whether it's QuickBooks or some other management information system. And if there's a variance, for example, if they have less physical inventory on hand than they have on their system, they need to make an adjustment so that the amount of inventory in terms of dollars and quantities on their accounting system matches what their physical inventory is. In a perfect world, when you're making purchases of inventory, that gets added to your inventory on your balance sheet. And then as you're making sales to customers, of course, that comes off your inventory. But what can happen sometimes is, sometimes items could be stolen or they could become damaged, in which case you've got to write that inventory off so that your physical on hands match your accounting records. In Chapter 10, there was some damage done to three gash hedge trimmers, and you've been asked to write those off. So the first thing you need to do is you want to set up an individual general ledger account in your chart of accounts. Again, you go to Accounting and Chart of Accounts, and if you haven't set up an inventory shrinkage account, you can do that. You can call it inventory shrinkage, inventory write-off, whatever you like. And we want to assign the type of that account as a cost of goods sold. Okay, and if details, you can call it supplies and materials. The reason we keep this as a separate account from your regular cost of goods sold is typically cost of goods sold, we want to be able to determine what our profit margin is on items that we sell. Now, when we're writing off inventory, we don't want the write-off, the expense of that write-off, to impact our actual margins on inventory that we sell. So this is why we like to keep it separate. Not only that, when we're drilling down and looking at information on our system, we want to be able to tell of the total cost of inventory how much was actually sold to customer versus how much we lost due to damage and theft. If we're losing a lot to theft, then that will tell us we need to make clearly need to make some adjustments as far as our security is concerned, or perhaps where we're keeping our inventory in location in our store. Okay, so with that, again, before you start, you need to have an inventory shrinkage account, and that needs to be allocated as an expense to cost of goods sold. Once you've done that, we can go in and make our inventory adjustment, and to do that, we go to the upper right-hand corner of the screen to this little plus icon right here. We'll select that, and in the last column on the right, under Other, we'll select Inventory Quantity Adjustment. And this is a screen that we have pop up. Now, the Capstone project asks us to date it for July of last year, but again, for this project, we're going to be dating everything for July 2019, or rather 2019 is the year we want to use. Now, you can see here my inventory quantity adjustment automatically selects the inventory shrinkage cost of sales account that I've created. If you don't have your account, if your account doesn't default here automatically, just simply hit this drop down menu and then find the new shrinkage account that you set up and select it. All right, so once we've done that, we will go to Product, select our gash hedge trimmer. Now, QuickBooks, at least in my system, it's showing that I've got an on-hand quantity of 6. Well, now that we've lost 3, I need to change that to new on-hand quantity to 3 because I've lost 3 due to damage. And then when I hit Tab, you'll notice the change will show up here in the change of quantity. You can see now it's had -3, so we're writing off 3 of these gash hedge trimmers. And because we've set up classes, we want to make sure that we choose retail business. And the reason we do that is that when we run our profit and loss income statement, this expense here, this inventory shrinkage cost, will show up in the column under retail business because it is an expense against that particular division or class of our business. All right, so now that we've done that, we're just going to double check our date. We're going to the correct general ledger account. We're writing off the correct product. We know that our new on-hand quantity is 3, and we'll hit save and close. And the adjustment is now done. Okay, and that's it for writing off inventory in QuickBooks. Until next time, we'll have a good day and we'll see you soon.